In this video, I will teach you a almost sure shot way to make 15% on an average return per year. This strategy can be executed by even a child. It is a very simple strategy, so watch from the start to the end. Now imagine something. Falls and rise, they are normal. And during the fall we panic and we try to buy as much as we can, as many stocks as you can, and then after that little bit of profit we sell it. But what if we can capture the fall and we can take profit from it? Think about Nifty. It consists of 50 biggest, largest, strongest, bestest companies that India has to offer. Whenever among those 50 companies, whenever there will be a company that is actually underperforming, Nifty will cut it out and Nifty will include a new company. That is how the Nifty stays strong. And that is why Nifty will always stay strong and it will always move up. If someday, any day, Nifty falls, then the whole stock market will fall. Whole Indian economy will collapse. Nifty can fall. I have seen the fall till 65% from the top. But Nifty will always recover. And that is exactly why we will buy the whole Nifty by buying Nifty Bs. Nifty Bs right now they are trading at around, as you can see, 187 rupees. They are trading around 187 rupees and they track Nifty 50 properly. Okay. So we are basically buying 187 rupees, by buying one quantity, by buying one ETF, by buying that one share with 187 rupees, you are buying the whole 50 companies. Do you understand now? Let's talk about the indicator. You are seeing this indicator and as you can see the indicator, the price reacts to the indicator. It goes to the top, to the profit booking zone, and then it comes down. It comes down and again it goes up. Whenever it goes above the thing, then it creates a breakout. Now how will we buy? We will buy when the stock comes below or closes below, or whenever Nifty is trading at least at 11% discount from the top, from the recent 52-week high. Now you don't have my indicator, so that is exactly why you won't be able to use my indicator to buy perfectly from the bottom and sell at the top. That is impossible for you. But you don't need my indicator. You just need to wait. For every year there will be at least 11% drop at least once. Every year it will be once, at least once. Maybe multiple time it will happen. That is very normal. Whenever the price falls below 11%, you buy at that time. You buy one lot and you wait for the 10 to 15% return. Now, previous year it was different. Previous year it has given only 6, 7, 8% dip. That is not much. But with my indicator you would have able to bought it. Anyway, previous year was a different year. But sometimes market will fall beyond 10%, 11%. Let's assume this is 10%, 11%, right? After that it has fallen more and more and more. After that it has fallen 39%. So what you could have done? You could have bought here one lot. You could have bought again at 10% from the top. You have bought at 10%, you have bought at 20%. Now you will buy at 30%. Every 10% drop you will buy. Now after that what happened? This price has become your average price. Now if you consider your average price, then it has given you around 85 to 90% return. That is exactly how you buy. Whenever it falls falls more than 10%, 11%, you will buy. Okay, let's assume here you can see it is 12% fall and you can buy. Or maybe if we talk about this thing, It is 14% drop. Whenever it came to the indicator bottom zone, it was 12%, and after that, as you can see, it has given a recovery and it has given around 15%, 16% return within 3 months, 6 months, 9 months. Within 9 months, it has given you this. So we can safely assume that it can give 15 to 16% return per year, and I have history to prove it. If we talk about the history, this is money control website, Nippon India ETF Nifty Bees. So Nifty Bees, since inception, December 2001, it has given you 2032%. If we talk about annualized return, then it has given you 16.4% annualized return since inception. Last 10 years, it has given you 14% annualized return. So this is how, so we can easily average, we can easily assume that it will give you 14% return per year. And when we are buying it from the dip, then it can give you much more. It can, some years it will give you 20%, some year it will give you 30%, 40%. If we talk about absolute returns, then this is the absolute return. These are the absolute returns. So this is how you buy. This is exactly how you buy, and it will never give you loss. It will most probably never give you loss. The fund is performing 16.27%, benchmark is performing 16.4%, so there is not much difference. Do you understand what I am giving you right now? I am giving you a sure shot way of making money without too much headache. If you don't have time, if you don't have patience, if you don't know anything about the market, then 14-15% per year is very safe for you. It is very easy for you to do. You will trade only once a year, twice a year maybe, and you know that your money will continue to be safe. But obviously stocks will be different. Stocks can give much more. With this kind of rise, if we talk about this rise from here to here, a stock can move 50%. I have seen it. A stock can move 50%, 30%, 40% is minimum here. But index will move slower, index will move smaller. I hope the whole strategy is clear to you. If you have the indicator, then that's a different story. If you don't have the indicator, still it doesn't really matter. Whenever it falls below 10%, 11%, you buy. Every 10% you average. That's it. I have seen the market fall to the extreme at 65%. Let me just show you. Let's go to the monthly chart, and as you can see, Nifty might fall, but it won't fall for longer. What do you think? This fall? 2007, I think that was the housing market collapse. 2007 to 2008, that was the high housing market collapse. And if you have bought it on every 10% drop, then you would have averaged it around this price. And if we talk about this price averaging, then how much has Nifty moved from that price? Maybe 359%, that is around 359%. So your 1 lakh rupee would have become 4 lakh rupee, 4,50,000 rupees in around 8 years to 14 years. In 14 years, tripled, actually almost quadrupled, obviously. And the price that you have paid here, it has become double. The price you have paid here, it will move less, it will grow less. So overall the average price is this. So if we can do some simple math, with 14% year return per year, you can double your money in every 4 years. You can double your money in every 4 years. If you keep growing it in that rate, if you invest in at a lump sum just for one time, and if you do nothing, then your return will be average. But if you keep investing it every year during the fall, then your money will be double within 4 years. 14, 372, sorry, that will be 3 years. Your money, sorry, I'm really sorry. 5 years, in 5 years. 72 divided by 14. 72 divided by 14. That is around in 5 years, your money can be doubled easily. That with 14% return. With 15% return, that will be less than 5 years. 16% return, that will be better. 17% return, that will be better. Just divide it 72 divided by 17. You can easily generate much more than 15% just by buying at the right time, because if you notice, every fall is 11% minimum. 11% minimum. If you buy at every 11%, then that's a good thing. And in Nifty, you will never lose money. And even if you grow by 15%, that is still more than 250% more than whatever your FD is generating for you. Mutual funds also give you this kind of return, but they charges you more. They charges you 1% to 1.5% of your whole capital, and by buying Nifty Bs, you are not getting anything, you are not giving anything but the brokerages. And let's come to the Bank Nifty now. Bank Nifty will generate you more returns, much better than Nifty itself. If you notice, banking sector is a bigger sector. Banking sector is a better sector. Now, if we talk about banks, then that's a different story. Let's just turn on the indicators. Now, the safe trader should invest in Nifties and Bank Nifties, divide both on an average. If you see the Nifty, when the Nifty has fallen by 10%, the Bank Nifty has fallen by 18%. And after that, what happened? After falling for 18%, it has given a 12% recovery. So we can easily expect a 18% recovery from here. But this is there the magic comes. From the top, when it's falling, it has fallen by 18%. But from bottom, when it's going up to that same exact level, it is going up by 22%. Do you understand now? You have captured the 18% fall and your profit is 21%, 22%. That's how the math works for you. Same logic you will invest for Bank Bs. Let's check Bank Bs. So Bank Bs are trading at around 380 rupees. If you had bought at 348 rupees right here, then you would have made profit of around 12% easily. And let's just check how much Bank Nifty has performed, Bank Bs. Here. Just give me a time. Okay. It is not showing. Let us just change historical return. This is the money control. Here. As you can see, while the Nifty has generated 2000%, the Bank Nifty has generated 4000%, and Bank Nifty on an average generated 23% return here, and it has generated over 14,000 on the long term. So Bank Nifty generates much bigger, much larger returns on a smaller period of time frame. So what we can do here is we can buy 50% Nifty and 50% Bank Nifty. And that's how we will diversify our capital, we will diversify our portfolio, and we can generate on an average very good returns. So I hope the whole concept is clear to you. If it isn't clear to you, then please ask me once again and I'll repeat, and please watch the video once again to understand it properly. And if you have any questions, you can ask me, and please consider joining the Telegram channel as well. I give many different updates there, many important updates there, and also consider subscribing the channel. Thank you so much. Okay.